So Haley,
Sean.
gotta tell you a dad joke.
All right.
I know a lot of jokes about retired people,
Okay.
but none of them work.
Maybe you should just stick with the money-wise FAQs.
You're probably right.
Sean, what are some of the complexities that a client would need to navigate when expanding their business into other states?
This is a great question, and there's a couple of answers, right? This comes up a lot now because with the advent of remote work and the increase in remote work, we see employers adding employees in other states without necessarily expanding their business into other states. And so there's really two things there. Are you expanding your business into another state? Are you going to start operating with locations in another state? Or are you just hiring a remote employee in another state?
So if you're just going to hire a remote employee, the employee's just going to work there, what's that look like?
Great question. You'll want to check with the individual state to see what the rules are, right? You'll definitely need to register for a withholding tax account if they have state withholding. States like Tennessee and Florida don't, so you're free there. You'll want to register for an unemployment account with the State Employment Commission to make sure that you're able to pay the unemployment taxes for that employee. You'll want to understand if there are any other taxes. A number of states are adding taxes for paid family leave and paid medical leave because the state is providing a fund for those. Some states require either a state disability insurance or a comparable plan for that. So you'll want to understand what you need to do to provide your employee from a compliance standpoint on the tax side of things, and then you'll also want to understand that state's wage and hour laws. A lot of states default to the federal rules for minimum wage, for overtime. Other states have different rules. California has different rules for overtime, for example.
So now when we look at a business that wants to start putting their business into different states, what's that look like?
So all the same things on the employee side, but then you'll also definitely need to know how you might want to register to do business in that state, because now we're not just talking about having an employee who's supporting the work of a business that actually operates and is headquartered in a state. We're talking about now actually opening a branch or a location in another state. So you're going to start actually as a business earning revenue and bringing in probably income in that state. So you'll want to make sure that you're registered to be able to do business within that state. You want to make sure you have the appropriate licenses for the locality that you're in, and you'll want to make sure that you understand the particular rules for that particular location. Again, I talked a little bit about it earlier, but minimum wage, there are now starting to be places where there isn't just a state minimum wage, that there are local minimum wages, and so you'll want to understand all of those specific rules. You'll also want to understand if there's any specific local hiring rules, if you have a physical location there that might change versus if you just have an employee who's a remote worker for you.
How would you give a broad description on what reciprocity looks like?
A lot of states that are neighboring have the ability to do reciprocal taxes. And so what that means is that maybe you're based in Northern Virginia, but you've got an employee who lives in Maryland and commutes into your office to work for you in Virginia. Virginia would generally say you have to withhold Virginia taxes, but Virginia and Maryland have an agreement that allows a Maryland resident to have Maryland withholding even when they're working in Virginia. Same with DC. Same with West Virginia. Oddly, North Carolina and Virginia don't have reciprocity. So if you're on one side or the other of the North Carolina border and you've got an employee crossing that, you're going to withhold the taxes based on where they work, not based on where they live. New York and some of those surrounding areas have some very different rules about reciprocity, and while there might be some reciprocity, there might also still be a need to collect a differential in the taxes based on one or the other of the locations. So certainly consult a payroll tax professional when you hire an employee who might be living in one state and commuting to work in another.
It sounds very complex in some areas, so what resources would you direct an employer or anyone who has a question on this stuff?
That's a great question. As always, I'll point at the Department of Labor. It has a lot of the general rules. You'll want to look at the individual state's Department of Labor or Commissioner of the Revenue or Department of Taxation. Actually, the American Payroll Association, their website, payroll.org, often has a lot of these questions. And then consult a payroll professional. If you're working with a payroll professional, you'll want to consult them. If you're not working with a payroll professional, you may want to consider starting to work with a payroll professional or just using one of the company's websites to see if they have any resources for your specific area.
Thanks for the information, Sean. I think that's very helpful. Those resources will be a lot of good guidance for people in those situations.
Yeah, thanks, Bobby. It's not an easy question to answer, but we'll do our best. If you have questions about this or any other payroll-related issues, please check out our website, sign up for our newsletter, or follow us on social media. We're on Instagram, LinkedIn, Facebook, and YouTube.
Also, feel free to stop by the office or give us a call and speak with one of us directly. We'll be more than happy to answer any of your questions.
My name is Sean,
My name is Bobby.
and this has been a MoneyWise FAQ.